The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here. This is the Wednesday edition, 30th of November, end of the month. We start December. I'm just double checking. Yep, tomorrow. And Dow's down 140 at 33,713. I've already gone through since Monday the reason why for subscribers to my opening call, we've raised cash. We're kind of cautious. We still, because we were in the diamonds, Dow diamonds, which is 1-to-1 long the Dow. If you're long the Dow, also we're in the 3 times long, rather aggressively long. But we've taken profits, small profits off. We want to keep a good core. In the meantime, what we've done is we've gotten a 3 times long the short position of the S&P. So the SPY is the SPY is a SPIDER fund, and it's trading down 31 cents at 394.92. Made a high of 402.93, just above the 200-period exponential moving average. And then, so let me just give you the dates. I didn't type the dates in. That's on the 23rd, it goes to 402.93. And the very next session, it goes to 402.91. I typed in here, and I discussed this, I've showed subscribers. It's called the Chapman Wave 2-bar reversal. It doesn't mean to say it's going to work, but it happens so rarely, especially when you're going to a top at either a P, D, E, or F in the Chapman Wave methodology. I guess I should do this because we always have new listeners. So let me just do this for 1 second here. In the Chapman Wave, we try to identify the lowest low bar, and from that we count each successively higher peak, alphabetize them, A through G, uppercase on the way up. Only 7 peaks. You can never get 8. You never get an H. But at D, the 4th highest peak, other things can happen. There's a whole bunch of things that we talk about. But in the meantime, what we've done here is we've gone from the low of 348.11 on the 13th of September, of October. We're in peak A, peak B, peak C, D, and then an E. Pulled back sharply, and then went gray A, because underneath that E, the technicals were still strong in the sense that the MACD never crossed negative, stochastic never went under the 80% level. The 9-period moving average was still holding above the 14-period moving average. So it was a question of whether there's a restart so that this becomes the next leg going straight to the 200-period moving average on the 15th, was it? On the 15th of November at 342.31, did I say 3? I meant 402.31. Was that an old F, just a continuation of the alphabet, or was it a brand new B? Well, I put in F/B. We don't have to do anything because all the technicals were good. Pulls back, and then my rule of 136 says that at 6, it has to either trigger a brand new, like a buy signal that gives enough strength, or you've just got a quick pop-up that's going to fail. But it went to that 402.93 level, and that's a G/C. Then it made a lower high, but what did I say, by 1 or 2 pennies. That's your 2-bar reversal. Then on Monday, we had that ugly downturn. We had quite a negative session yesterday. Today's a bit of a struggle. The day's young. I mean, what are we talking about? We're talking about not even 40 minutes into the actual session. So anything can happen. You've got the Fed speak. You've got everything going on today. But this is where that double top at the 200-period exponential moving average, especially with the Chapman Wave 2-bar reversal, even though the MACD was still strong, it's not now, but it was strong. The stochastic was way in the 88% area. Now it's at 81. the on-balance volume said it's a bit overbought. But the 9 period is still, even now as we speak, is above the 14, and that you've seen. As long as that's holding, that's a good sign. So what I want you for subscribers is that I want you to be aggressive in a smaller position. In other words, SPXS, and I'm talking about this, I should have just kept it amongst the subscribers, but this is really important because this is the thinking. This is what allows you to try to just at least attempt to pick bottoms and tops, and it gives you a good leeway when you get this volatility off a bottom or off a top. If you're in at just about the right position, it allows you to bypass that if you are correct, and that's the most important thing. And you can see by this SPXS, it's stopped dead at the 14-period moving average. It's just above the pink 9-period moving average. So we're in a 20, and it's at 20.64. We've taken a little bit off. Just as part of money management, I like to do that if you're correct and it starts to move your way, and then you can hold it longer and longer. So we can even add back. I'm not doing any adding back right now. The day's just too young. So what we're looking at here is, look at that, a weekly S&P V-shaped pattern that went to a peak E and then pulled back very sharp. This is the SPXS. In other words, you're looking at the SPY, that reversal from the low. Look how sharp that was. And we're failing to go in the S&P even into, let alone above, the Chapman wave inside track repellent zone. So all of these are just suggesting, let's get aggressive with a smaller amount of money. We're still trying to retain cash because I see really good buying opportunities coming up. Not just yet. We want to be there. And in the meantime, back at the ranch, I want to now go through all the other things. I've done that just to give you a sense that in the shorter term, I'm going to do this right now. I meant to do this yesterday when I was interviewed by Tom O'Brien on the Tuesday afternoon interview series. I forgot to do it. I'll do it now. About the 11th of November, I typed in here, I've got a technique that I developed, ever so long ago. It's called the Chapman Wave Dark News Cloud Cover. The actual title of it has been modified a few times. But really, you get these, if you've ever lived in climates where I grew up I was born in Cape Town, South Africa, and then we moved from Cape Town, most beautiful Cape Town, to a little mining town near Johannesburg. But they used to get, in the summertime, they would get out of the blue, like 3 o'clock not every afternoon, but most afternoons, you suddenly see clouds in the sky, and then you might get a shower. But it could be a shower. It could be just an intense rain. It could be an intense rain with hail the size of half-inch hail. And then maybe you go into the store at 5 minutes to 3, and it's just beautiful, and you come out at 3:20, and you look at everything soaked, and you see the steam coming off the road because it's summertime and it's so hot. But it's sunny and bright. So you never know with the dark cloud cover how serious it's going to be. So I've always had this thing about the dark cloud cover. And in the meantime, on the 11th, I said, I'm typing in here in gray, dark news cloud cover, and I'll show you the chart when we get back. But over the weekend, I said no. I think it was even Friday. I said no. I'm making it pink. Or in this case, it says now it's a little bit more serious. I'll be back. Basil Chapman, Dow's down 179.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back and we're talking about the Chapman Wave Dark News cloud cover, and I just had a message to say Steve Rhodes is out. So I thought, you know what? I've just managed to do a little switching of some scheduled things. I will do Steve's show, which comes up straight after mine. And I know Steve has a great show. People either call in or write to him and ask questions about stuff. Basil Chapman at TFNN.com. Send me an email and or in the den, just text me or whatever it is. When I do Steve's show, we'll just run through a bunch of stocks. If you want to send me questions about stocks and stuff, we'll do that. So we're looking at, on the 11th of November, I said, I'm anticipating that we're overbought, and that even though it's really positive that the Dow has gone above this long-term trend line, I call it, this is a falling axe formation, but in the meantime, more importantly, it's the, I don't really want to mess the chart up, but I usually put two lines there to say that that's just a little mini down channel. And within that channel, it's called the repellent zone, and now it's a propellant zone. And I anticipated there could be a choppy period, and I just couldn't help hearing on anything I turned on or listened to that within the context of the sentiment, so many people were saying, oh, yeah, we're just going up all the way to the end of the year. And my sense is that we're kind of overbought. I have a rule of thumb that says if we survive October, the last week of October, going to the first week of November, close to the year's highs, we usually close the year near the highs. In between, you can get an incredibly choppy period. Well, if I'm right about this particular pattern right here, you see how the 9 period moving, the green 9 is way above the 14. It would take the Dow to close somewhere under 32,900, maybe 33,050, but probably under 32,000 to get the green to turn pink. I don't know yet if we're in that particular phase, number one. Number two is, within that context, we could have another one of those rotational corrections where some of the very, very weak stocks throughout 2022 that were the winners of 2021 start to find some kind of support. We don't know yet. but I'm anticipating that we're in for a kind of a choppy period. But that whole area between 33,000 and 32,700, I think, to me, maybe it's a worst case basis, but if you see each one of these, the rectangle, what happens is it very often starts a big plunge to the downside. I don't see that. Now, I don't want to go through the internal low and the residual low, internal low, and that's a technique that I developed a long time ago, other than to say the low that was made, what was it, the 16th, 13th of October, I think that's going to stay in place for quite a while. So that's what I wanted to say, that we're in this phase now where news, so let's go back to that analogy that I made back in this little town of Brakpan, but it could be anywhere in the Transvaal, the Johannesburg area. They've changed the name over the period that I've been out of South Africa, where you get those thunderstorms and you never know, is it just a light little, is it like a little drizzle? Someone was telling me yesterday they're from Seattle and they moved here. And he said, I'd rather have those little faint drizzle. I know those drizzles because in Cape Town, South Africa, in the wintertime, you get it and it persists. And it's kind of cold and it's fine because it's just a little fine drizzle where the wind can blow the drizzle this way and that way. Different to heavy rains that can even produce hail. So this is what we're looking at. We don't know, but I do know that we're in a period right now that matches what I'm looking at when I start to think of dark news cloud cover, because the market is recognizing it. That's the only thing about this. Does the market recognize it? And the answer is, so far, yes. Okay, now with that done, so I see I'm getting one or two emails here, Basil Chapman at TFNN.com. Questions for that would be normally for Steve. I'm going to wait. We'll do them in Steve's session in the next hour. Meantime, back at the ranch, I've been talking about double bottoms, double tops. I found one that I meant yesterday. I showed a whole bunch of them. Today I'll show another. Look at this. This is, I did the wrong thing. INDE. Let's get that back. And now I can go to this, and that'll say Procter & Gamble defensive area. Defensive, not defense meaning Raytheon, defense meaning those products that can raise prices when there is something like inflation, at least for a period. Well, look at this. Procter & Gamble, I'd shown this a while back. I'm not even sure why we didn't go long for subscribers to my opening call. Because look at that A in the weekly chart. That should be up there by now. I was already down at the 139 area, and here it is at 145. So let me show you something very interesting. There it is. This is the weekly chart. 121.54 on the 5th of March in the weekly chart. Starts to move, goes peak A, peak B, C, D, E. Remember in the Chapman wave, you can go to an E, go to a D, and that's where other things can happen. In this case, it went a little higher, and it turned out, I never did write that in. I was absolutely sure I had done that. What I do in a case like this, I say it went to a D, and then within 3 bars, 1, 2, 3. That was 4 bars. That's why I never did it. If it was within 3 bars, it would fit the category that I call the Chapman wave flat base restart. Flat base restart. I was going to show that in something today, and I forgot. All right. So then it starts a brand new A. So this is a down arrow right here. And that becomes an up arrow. But look, you see this 9-period moving average crossing the 14-period moving average? That was somewhere around, so March was the low, April starts the crossover, and it stays all the way even after that doji peak E, comes down, starts brand new A, B, C, and then it goes to a D at 165.35. See, the MACD is good, stochastics already turning down, on balance was already giving you a signal to say it's pulling back, and then it starts. Using that, I've got a technique that I call bar symmetry. Using that technique, what we've got is the number of bars on the left equal exactly the number of bars on the right. That's the theory. But in this case, it got there about 6 weeks early, and it went to 122.18. 121.54 in March, October, 122.18. That's 68 cents, 60-something cents, less than $1 away. And then it starts to move to the upside. And now the left side high, you can say, could you do a Chapman wave bar symmetry here? Absolutely. There's the number of bars to the left, from the left, that peak over there at on the 19th, the week of the 19th of August at 150.63, comes down to the low of 122.18, October the 14th. And now we do bar symmetry. Do I get that right? And bar symmetry says that buy, make that green. As we wrap up, I'm going to talk about it. There it is. Bar symmetry to the exact peak. We're under it. We're at 147.34. So it's just a little under it, but that's what's called bar symmetry. I'll be back. Dow's down 229.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So just before I go to some other things, so that Procter & Gamble we kind of done with, in the 10-minute E-mini, when you identify a rectangle formation, this one moved, I must have hit it by mistake. Let me just move this over right there. When you can ascribe to a chart parameters that are very clear, in other words, the high that was made at 11 o'clock, was that yesterday? Yeah, on the 29th at 10:40, that's exactly this time, yesterday, at 3981.73. It's a 10-minute chart, yeah. Down to the low that was made at about 11:30 of 39.43.25. I like to look at the parameters to say, do I get an inside a narrow rectangle formation? What do I do? Well, what happened was, in this particular case, it had a whole series of highs and lows. This is the 10-minute E-mini chart. And then it made a peak F. When it was over there, right over here, that was early this morning when I was up, I looked at it and I said, okay, I think it's coming back down, even if it goes higher, which would have made it a difficult trade. But right here, using this low at 7 o'clock last night at 39.56.50, a measured move for an identifiable low bar that you can use. If it isn't obvious, you have to use a particular candle. I used a particular candle, and I drew in. Green says it's going up, and pink says it should turn down at some point, and I put an X in. I meant to put another X in. I'm going to sort of put this in. I have no idea if it's going to work out, but I'm going to put it in because I forgot to do it. I thought I'd do it live, and I forgot. I put that X in to say that would be my target. Well, there was a sudden spike, which went to a peak G because the stochastic was very low. The MACD barely moved, and it went from pink, negative, to quickly green in the 9-period moving average, and then turned down. But in the meantime, I looked at this. I thought, how on earth is it? It was over here at the time. I'm moving this to the right there. I thought, oh my! And even that red candle right there, that red candle, I thought, how on earth will it get back there? But the technique says, if you're able to draw from a particular left side high or left side low, a diagonal move that I call the Chapman inside wedge, using it, I've been discussing it since I'm here on TFNN. I've been doing it for decades. Target support line, pink dash, because on the way down, green on the way up. That tells you that you can get a price movement to that particular diagonal line, and if it matches your measured move, it says there's a really good chance that that's the way it'll go. So I put the X in. Well, lo and behold, it took a while, but within 3 points, it came down to that level. Then it bounced, failed, did the dreaded H. You'll see that in the 1-minute chart in a moment. And now we're in leg D, lowercase on the way down, leg D to the downside. And what kicks in, lowercase, is the move that I've got that says the 30, whoops, where did it go? The 39, right there, 39.41.25 low. I should have typed that in, 39.41.25 is a target to the right side. I don't know if it's going to be, but look, everything else is pointing that by, and that's why I've extended it to the right. I don't usually like to do that. By 12:50 this afternoon, just before Larry's show, that 30.4125 level could be tested. More than that, I don't know what else I can do. That's just the way it is. And to look at it on the 1-minute chart, all these different patterns. Look, there's the dreaded H. What's that? In the Chapman methodology, one of the things we look at here is, if I can get this typed in, there it is. There's a pattern that I look at. I look at only 3 basic, I call them trend lines: straight up, straight down, curve. This is the straight up, straight down is 1. Cup or V-shaped pattern is 2. Arch or inverted or pyramid pattern is 3. And if you make a combination of, say, 1 and 3, it means that if it goes up to a peak A or a B and then fails and takes out the left side low, watch out. On the right side, if it takes out the left side high, especially if it's only just a trough B, that's really good and says it can go higher. So those are the patterns we look at. And look what's happened. Look at these dreaded H patterns. It holds, breaks. Pulls back, holds, breaks. So we're going to be watching this closely. All right, I've done that. Now, the couple of things that came in that I want to look at. Gold. Gold had a move to the upside. It was a little suspicious because within the context of the move at that peak B above the 200-period moving average, everything about it is suggesting that it has the look of a peak D. But it is a B, and that's usually a positive. And I say, until it proves itself, I'll just treat it as if it's a B. But at the same time, it needs to do a lot more. And it's taken, look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars, and it hasn't even gone back to the 200-period moving average of 1789. The high that was made in the continuous contract was 1780. Oops, I'm sorry, it wasn't. It was 1806.6. And here we are at 1763.9, only up a fraction, up 0.2. And that just says that this big move in the weekly chart hasn't yet crossed positive. It's still pink. I'm watching this closely because gold is, I've said for months now, months and months, treat these things, I call them, these are the mnemonics that I use for the bonds, bondy, crude oil, crudey, D, dolly, G, goldie, and V, vixie. So I look at that and I say, try and cheat you. Oh, look, the volatility average has been pulling back, and even now is only barely, look, it's the volatility index is only up 0.30, 22.19. So you can't, the corresponding, I always think of Bach with counterpoint, where one melody goes one way and the other melody goes another way. The mirror image of the dollar and gold, where they used to move counterpoint, has been not working as well lately, although on a very short-term basis, yes. But with the huge move that the dollar has made to the upside, you would have expected a corresponding move to the downside in gold. You haven't got it, number one. Number two is, within the context of the VIX index, that huge move to the downside says we should be even higher in the general market, and we're not. Okay, that's another thing. The other one is very years ago, up until maybe just a year or two, before maybe the Russia-Ukraine fiasco. It's more than a fiasco. It's terrible. Crude oil used to weaken when the dollar strengthened, and used to strengthen when the dollar weakened, and all those corresponding actions that we had seen for a long time didn't always work. When the market was strong, very often bonds would rally, so the yields came down. None of that really applies. It can apply very short term. So with that said, there are a bunch of things I want to look at. Gold is acting okay after such a big move, but it's digesting the gains. Silver has had a really good, I've been saying silver is a much better chart pattern, and it's even holding better, but it's not really breaking out yet. I'll be back in a moment. Dow down 204, S&P's down 10. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, just had a change of plan. I guess Tom O'Brien is traveling today and he won't be able to make his show. So I'll be doing the 3 o'clock show. Won't be able to do Steve's as well. So it'll be 3 o'clock. But a couple of questions have come in. And so let me just show you this quickly. See the 1 minute chart. What's the objective in the Chapman wave? To get you at least to a D if you get a buy signal to buy mode. That happened here when it crossed positive. And look what happened. We went to a D, and now we're starting to pull back a little bit. There's the 1 minute E-mini chart. Now let's do this. We're going to go back. Okay, a couple of questions. Let me go to the questions. Number one is looking at ARLP as a buy. Where would you enter it? Do you like it? ARLP is Alliance Resources. Oh, I should have done a little work in the break to see what it was. 2.70 was the low there, 2.76. Okay, 268. Oh, that's different. Okay. So that's peak A, peak B, peak C, peak D in the monthly chart for ARLP. So that says, and it's done a huge arch formation. It's a little bit overbought, and it's making a candle today that if it closes around here today for the month, I have to call that a potential Chapman wave Roman candle, meaning if it closes at any point it's a monthly chart. Usually I go to a shorter time frame, but I usually take it on a daily basis to start with. If on any day it closes under 22.62, let's call it 22.60. If that closes under 22.60 on any day, watch the weekly, because if that weekly, then on that Friday, if it closes under that, be careful, because it could pull back quite sharply to the 20 point. Let's call it the 21 level. That's not such a big deal, but we're talking about a stock that has had a spectacular move. On the daily basis, it's gone to peak A, peak B, and it's gapped up. Maybe there's news today. It's gapped up to leg C, but all within the context of, and I'm usually very conservative when I do this in the beginning, in a rectangle formation. I could go to the top, but I'm not, because what happens in this decline, if it starts to make higher highs and higher lows, it should go to a key left side high, just under, right on, or just above the previous high, and then you've got to be careful. So at this point, 23.57. So the question is, where would a good place to get in be? And I haven't done the weekly chart. I just wanted to say the weekly chart, I have to sometimes go all the way back to get the starting point. You've got to pick the right starting point. That's peak A, peak B, peak C, peak D, E. And this is probably a peak F in the weekly chart, and you've made your dreaded H, but you've held so far. This H can go to a lowercase m. So what I would do is this: if you've done your homework at ARLP, once again, it's Alliance Resources. I haven't got time right now to look at what resources. I might do that in the break coming up. It's holding very well. I don't think the power of the up move has been surpassed by the negative action of consolidating, not the weakness, because the weakness, look, the weekly green is above the 14. It's real close to turning down, but it's not done that yet. And today you've got L, meaning the 9 is crossed positive in the daily chart. So I would say this: as you're a longer term player. I know the person who asked the question. So I'm going to suggest have a little patience. You might miss it, but the pattern that says that it's in right now says even if you miss it and it goes a little higher, where it was yesterday in the 2270s, it could come back to that. And if it takes that out, it means it's going to make an H pattern come all the way down. So I'm going to suggest one of two things. One is you just nibble on it right here because it's not bad. It's just, I think the energy sector, just for the moment, is digesting in this part of the energy sector. So I'm just going to suggest to you, why not, you could nibble here at 23.58. I'd even have a 10% stop on the nibble because it could go a little higher before it turns down. But if you're asking me where would the best risk reward be, I would say 22, and I'd have a 20.50 stop, and that would still be a starter position. If you miss it in the start, in other words, if the technicals in the daily really start to improve because it's closing for 3 or 4 days above 23.50 going through Friday or even Monday of next week, I say, you know what? Now you could add to your position. If you've nibbled at it, if you aren't in it, you could actually start your position. But at this point, it's in the right sector. It has been in the right sector. This sector is under some pressure. And you asked me about BTU. If I remember correctly, BTU was Peabody. Yep, there's a Peabody Energy. This is a different chart. This is retesting the highs. I spoke about Procter & Gamble, and all for the last couple of weeks. I'm showing you how many charts have gone to within pennies of their previous high. Look at this. BTU trading at 31.72, down 24 cents. The week of the 22nd of April goes to 33.29. What's the high today? 32.89. It's within 40 cents over a period of 6 months. April, May, June, July, August, September, October. 7 months. It goes, and what does it do in the weekly chart? It goes from a trough B, it goes peak A. I mean, isn't this incredible? A, B, C, and there's your prescribed B in the Chapman methodology. If you get a buy signal, upgrade to a buy mode, you should go to at least 4 to the fourth highest peak, which is D. And look, Peabody Energy Corporation. Oh, remember all the notation you see here is by me. There's nothing automated. Should. Oh, now this is different. I like this a lot better. It should, as a new buy, I wouldn't say a new buy, but if you're already in it, expect that it's going to take out the high of 24.75 that was made the week of the 29th of April by 1 penny, at least 1 penny to start leg D. So 31.69, that's a 10% gain, right? Yeah, it's about 8%. So that's a little different, but even here, it's in leg E to the upside. It's getting a little toppy, nothing negative. I'm just saying on the very short term, not only that, these double tops, I'm very wary of double tops because markets have been turning down from these double tops. So here again, I'm saying, yes, they are. You've picked exactly the right area that has been working. I'm just thinking that there's going to be, this is a better one though. I prefer this one to ARLP. So yes, BTU, in leg E. Oh, you know what I would do? I don't know if you use options, but if you're looking at the options, I would wait for a little bit of a dip, and if it hasn't gotten to above peak C in the monthly chart in that 31, I say, oh, I'll give you the exact price. If it hasn't gotten above 33.29, so it's only 2 points. Before, you could even buy an option and just play it that way and let it just use that using the least amount of money. I like it. It's been in the right sector. I'm just saying that it's a little tough to buy it here unless you spread it out. Now, the other way to do it is to say, if you've done your homework and you really do like it, start a nibble right here. 29 is where I would, 29 between 29 and 28. I'd add a little bit. And I test to see, is it going to go lower or is it going to make a U-shaped pattern like it keeps doing to go to yet another high? That's the one. So I hope that helps you. Next question came in. I thought I looked at silver. I'll do it again. SL. All right, we've got one segment to go. So folks, just let me apologize. I won't be doing Steve's show. I'm doing Tom's show at 3 o'clock this afternoon. You can still send your questions to Basil Chapman at TFNN.com. It's my pleasure to take them. And we're looking at, what are we looking at here? We're looking at the Dow down 224 and the S&P down 13. The S&P is better than the Dow.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So GT, hey, that was fantastic. Yesterday you asked me about NEO, and I said NEO it's just kind of doing okay, but let's see what happens with the FXI, because there's a chance that with China, you never know when things are just going to suddenly work out better than you thought, even though the news is always terrible. And here it is, a very strong spike. It's up 211. It's up 20% at 12.62. This is a neo-Chinese company, electric cars and vehicles. But I also did the FXI, remember? Look at this, the FXI. Go on to that leg D that was missing. That's what I was saying. The price or the action is saying it's not as bad as we hear on the news. That's all you can say, right? I mean, nothing more than that. Still in a major down move in the monthly chart. Weekly chart just improved a little bit. Daily chart looks actually quite good in that leg D. Congratulations. Very good call. So let me just reemphasize. So I'll do the news next. Then there'll be a replay of something. Maybe it could be Tommy's show, because Tommy did a great interview with Teddy Kegstack this morning, just talking about currencies and Tommy's explanations of different things with the different indexes, CPI, etc. It's just fabulous. So it's worth listening to, and I will be back. So then you've got your regular programming. Steve is out. Then you've got Thinkorswim with Kevin Hincks, and then you've got Larry Pesavento, of course, and then Dave White at 2, and I'll be back at 3 to do Tom's show. Tom is out. So, yes, we're looking at the Dow down 221, S&P is down 13, the VIX index. Now, this is very interesting. Look at the VIX index. Just kind of not even waking up, not even above yesterday's high. But my suspicion is that when all is said and done, we'll have a pop in the VIX index. I don't know if it gets to the 537, 200 period moving average in this particular move over the next week or so. But I think it's going to rally a little bit. Then it could get to the it's at 2208 right now, 2380, 2450, and then we reassess. So have a wonderful rest of the day. I'll see you later on at 3 o'clock. The Tom O'Brien Show, my pleasure and privilege. And stay tuned to the program today at TFNN and check out